We're going.
We're going.
There it is. All right.
Must be 9 o'clock.
It must be 9 o'clock. How you doing?
I'm good, thank you. I feel like it's Monday.
Yeah.
I had yesterday off.
Oh, yeah.
Yeah,
President's Day. Everybody, I mean, it seemed like all the banks. I was trying to get a hold of somebody for a loan that.
Hello?
I'm trying to. Yeah, well. No, I already told you what happened. I already told you what happened. It was the buyer's lender.
I know.
And I'm trying to get a hold of them.
Yeah.
And because of the President's Day.
Yeah.
And I'm like, President's Day, really?
Yeah, well, you can't fund any loans. When the Fed shut down, you can't fund a loan. You can't really close a loan. And so we get that lovely Monday off. And it was really nice, though. But
hey, Lindsay. How you doing? Hey, Laura. Josh?
Josh Collins. Hey, Josh.
Yeah. So, yeah, I was pretty aggravated. Yeah. Now, if the lender is watching this, please give me a call after this and let me know if the buyers of my home
it's all good.
have got approved.
I'm sure it's all good. They just couldn't work.
Yeah, I hope so. Well,
that's all it is.
This is Patrick Don from Weicker Realtors, and this is
Kim Watson with SWBC Mortgage.
And today, as you see our cool screen back there, maybe a little bit.
Yeah.
What did you say, Lynette? It's backwards. Oh, yeah.
Oh.
I got flippy days. Well,
that's interesting.
Lindsay,
thank you.
I appreciate that. I'll just explain it.
Okay.
That'd be fine.
Yeah, I forgot everything's flip-flopped.
It's flip-flopped. Doggone it. I don't know how to fix that. When I get home, Lindsay, tell me how to fix that.
Well, at least we don't have the halo of flowers and things that happened earlier in trying to go live. There's filters, I guess.
Yeah, the filters from the thing, and I had
it could have looked good.
Like flower halos and sunglasses. But anyway, today we're going to be talking about absorption rates and how that, what that term means in real estate, but also how it affects your negotiation power in the process as of right now, and in the future when it starts to change. And then Kim's going to talk about the market shift and the rates, interest rates, and all that kind of stuff. Like, what are you saying back in the day? What was the rate back in the day?
Well, back in when I got into this business, it was funny. When I first even got into banking, it was way back in the day, and that's when the prime rate out there was just dropping to 10%, like dropping to 10%. So mortgage rates back in the 90s were, on average, maybe about 9%. For a mortgage. So, I mean, truly only the wealthy could really buy a house.
Yeah.
You had to have 20% down, if not more. And the rates were sky high. I mean, that's what people pay on credit cards in some cases. So that was your mortgage. So when we always talk about historical rates, like you were saying, it's good to put that into perspective. Because if I'm looking at, we just ran some quick numbers, that today on average, a loan size is about $200,000. That's just an average, high, low, it goes there.
If you can see the backwards writing on our board, that's about right.
That's kind of about right. But back in the 90s, at a 9% rate, if somebody was getting a $200,000 mortgage, that payment would have been about $595 higher than it would be today per month. $595 a month.
Can you imagine?
So you're buying like 2 homes, because that over the life of the loan, that was costing like $215,000.
And and the reason why I wanted Kim to share the story, I don't know. I've never been in that land. I've heard stories about it, but that it was real is amazing. Like even Melissa, our broker, she said when she first bought her house, it was 10%.
Yeah.
So, and then, for me, I think when I bought it was it like 3.7 or something like that?
Probably.
And I can't even imagine, 10%. And like you said, credit card. But, so basically, I'm going to talk about absorption rate real quick, just so that everybody understands. So this is an important statistic that we use in the real estate industry to tell us how long homes are going to be on the market from when they go on the market. So it tells us what our negotiating power is depending on the buyer's or seller's market. You'll hear this if you're looking to buy or sell a home. You'll have real estate agents tell you what absorption rate. They'll tell you what the absorption rate is. They won't explain to you what it is. But that's why I'm doing this right now, to give you guys a little bit of understanding of our approach. So basically, an absorption rate is figured out by the total number of homes that are on the market at the time versus the total number of homes under contract and active contingent, basically saying they're under contract. And then divide it, and that's how we come up with our absorption rate. So if you can see backwards, right now, except for, what that means is that all the homes on the market right now, if no other homes entered the market, they would all be gone in 2 months.
Wow.
60 days.
That's huge.
Yeah, that's way huge, especially when we're doing a listing contract of 6 months. That's the promise. 6 months is, I promise you I'll sell your home in 6 months, but it's going in 2 months. And we have experienced that in our office as well. I mean, we're 57 days is normally where we selling our homes at.
Okay.
So when you know that, knowing as a seller, that's great because I can just put my home on the market.
Yep.
2 months, I'll be under contract. 3 months, I'll be in my new home. But what also comes with that is when you're a buyer on the market, now you're selling your home and now you're going to go buy. Now, all your negotiating power that you had as the seller, and when you turn buyer, is all gone. So a lot of times what end up happening is we have, like the last home that I was selling, $4,000 above asking price because we had multiple people coming in looking to buy the home, and negotiating these contracts against each other is commonplace right now, and it's been going on for about at least the past 8 months.
Yeah, I was gonna say I hear it all the time of people that I'm working with saying, "Well, I'm gonna look at the next house because they already had 3 offers on this house that I was starting to fall in love with."
Yeah, and it happens all the time. So like. There's people that I was talking to, like, there's another offer, there's other people looking at it, I don't even want to deal with it because I know that I'm going to get in a bidding war. So this comes to what Kim is about to talk about is the rates in preparation. We talk about, I think every video we talked about pre-qualification and all this stuff, getting your stuff ready. But Kim's going to be talking about the rates in how you become the buyer that can snap up the home before everybody else starts bidding against you. All right.
Exactly.
So, talk about the rates.
Well, again? I want to kind of go through it. What we always talk about historically low. I think you hear people in the mortgage industry are always throwing that out there, which is why we wanted to share with you what happened in the 90s with the 9% rate versus today. Because when you bought your house, it was at 3.75 probably in the low threes. Those were phenomenal rates. I mean, that was unheard of back then. And so as the rates started to tick up, especially